What is up, YouTube? Today we're not going to be using our usual format, and that is because it has been earnings season. And yesterday, two companies that I own reported earnings: iRobot and Twitter. So iRobot went up 17.74%, and it's been a downtrending stock. If you look at its past 1 year, it's down around 44%, and it's topped at around $130. And the reason for this is, even though it had okay or good earnings, it has reported that the earnings might slow down because of the China and America trade war. But yesterday it reported earnings, so let's see what it reported. So iRobot came out with quarterly earnings of 70 cents per share, beating estimates of 42 cents per share. This compares to earnings of 84 cents per share a year ago. The quarterly report represents an earnings surprise of 66.67%. A quarter ago, it was expected that the robotics company would post earnings of 54 cents, and actually produced earnings of $1.24, which is a 129% beat. So over the last 4 quarters, the company has surpassed consensus EPS estimates 4 times. And this is because it has gone down over the past year, because it has reported that the trade war would obviously affect the business. So iRobot, which belongs to Zach Industrial Automation and Robotics Industry, posted revenues of $426 million for the quarter ended December 2019, which surpassed the Zach's consensus estimate by 3%. This compares to a year ago revenue of $384 million. So as we can see, the revenue has been growing substantially. The company has topped consensus revenues estimates 2 times over the last 4 quarters. iRobot's share have lost 5% since the beginning of the year versus S&P 500's gain of 2.1%. While iRobot underperformed the market this year, the question that comes to investors' mind is, what's next for the stock? Zacks rank 5, strong sell for the stock. Okay, I don't think anything else is important. So right now, what are my cost bases? We'll be getting into that. As you can see, I've blurred out 3 things. These are my cost bases, the amount of shares I have, and how much is worth today. I just didn't want to reveal those things, but currently I'm up over 34.30%, and that is because I bought at $43.05. This has been a pretty quick gain, as I've been holding the stock for around 1 or 2 months. I'm not going to sell the stock anytime soon because it has huge potential, and it's only a $1.5 billion stock, I believe, its market cap. The stock we're going to be looking at is Twitter. Twitter is up over 15%. This is one of my smaller positions, and I'm not going to show my cost basis because I bought it like 4 or 5 days ago. So I'm up around 15%. So why did it go up so much? It's because it reported its first billion-dollar quarter with 152 million monetizable daily active users, even though it missed on earnings. Net income and earnings per share were both significant drops on the same period a year ago. Net income came at $119 million with a diluted earnings per share of 15 cents. In comparison with quarter 4 2018, Twitter made net income of $255 million with diluted EPS of 33 cents. So from this earnings report, I can understand that Twitter is now focusing more on growth. So how does this company make money? Obviously, it makes money from taxes. From ads. And that's about it. So these 2 positions aren't too big in my portfolio. Twitter's around 1%, and I think iRobot's around 8-9%. And again, don't just buy these stocks because I bought them. Do your own research. So thank you. Leave a like and subscribe. Comment down below what videos you would like to see.